Hey everyone, welcome back to Corporate Decoder, the place where we decode the nitty-gritty of corporate filings to see if companies are really doing as well as they say they are. Today we've got some news that might make a certain Nasdaq listed bio company breathe a huge sigh of relief, or maybe just a small exhale. Stick around to find out why. Alright, so what we have here is a Form 8K, which is basically a report companies file when something important happens that investors need to know about right away. Think of it as a major announcement. This particular filing is from Alaunos Therapeutics, Inc., who as of August 19th, 2025, received some pretty crucial news from Nasdaq, the stock market where they are listed. Nasdaq has told Alaunos Therapeutics that they have now met the requirements to stay listed on their capital market. Now, why is this a big deal, you ask? Well, let's dive a little deeper. Companies trading on exchanges like Nasdaq have to keep meeting certain standards to stay listed. If they drop below these standards, they risk being delisted, meaning their shares can no longer be traded on that exchange, which is generally a very bad thing for any publicly traded company. Alaunos had previously received a notice from Nasdaq back in April stating they weren't meeting at least one of these requirements. Specifically, they were short on stockholders' equity. Stockholders' equity is essentially what's left over for the owners of the company if all its assets were sold and all its debts were paid off. Think of it as the company's net worth. In their annual report for 2024, Alaunos reported having $210.06 million in stockholders' equity. Nasdaq requires at least $205 million for their capital market listing. So they were a bit short, specifically $440,000 short. Now, Nasdaq usually gives companies a chance to fix these issues. Alaunos had 45 days to come up with a plan and show improvement. If they didn't, well, the consequences could have been pretty severe, potentially leading to them being kicked off the Nasdaq. And here's the good news, the reason for this 8K filing. Alaunos has now provided updated financial information, specifically their quarterly report for the period ending June 30th, 2025. In that report, they showed their stockholders' equity had grown to $3.66 million. This is higher than the $2.5 million minimum $6 million they had previously reported. Because they've met the requirement, Nasdaq has confirmed that Alaunos is back in compliance and the issue is now closed. This is a huge relief for the company and its investors. Being delisted can severely impact a stock's liquidity and investor confidence. So, this update likely pulled them back from the brink. The report is signed by Holger Wise, the Chief Executive Officer, which makes sense as this is a matter of significant strategic importance for the company's operations and access to capital. So, what does this all mean for Alaunos Therapeutics? Well, for now, they can continue trading on Nasdaq without interruption. This compliance is critical for their ability to raise funds in the future, attract talent, and maintain relationships with partners. It shows that despite facing financial challenges, they were able to execute a plan to improve their financial health enough to satisfy Nasdaq's requirements. However, let's not get too carried away. While they've met the minimum requirement, $3.66 million in equity is still not a massive amount for a company in the often capital-intensive biotechnology sector. They've essentially dodged a bullet, but the underlying financial health still needs close monitoring. The story here isn't just about meeting a rule, it's about the broader context of a smaller biotech company navigating the tough financial waters of proving its value and its viability to the market. Their ability to consistently generate positive results and grow their equity sustainably will be the real test going forward. Now, looking at these results more broadly, Alaunos appears to have navigated a critical hurdle. The strength here is their demonstrated ability to respond to a clear compliance issue and rectify it with improved financials. The weakness which remains is the relatively modest level of equity, suggesting they probably still need to focus heavily on operational efficiency and fundraising. The opportunity is that with Nasdaq compliance secured, they have a stable platform to focus on their core business and clinical development without the immediate threat of delisting. A key risk to watch is whether they can continue this positive financial trajectory or if they might fall below the Nasdaq's requirements secured. They have a stable platform to focus on their core business and clinical development. Without the immediate threat of delisting, a key risk to watch is whether they can continue this positive financial trajectory or if they might fall below the Nasdaq's requirements secured. They have a stable platform to focus on their core business and clinical development without the immediate threat of delisting. A key risk to watch is whether they Alright, that's our quick dive into Alaunos Therapeutics compliance news. What's your take on their ability to secure their Nasdaq listing? Do you think they're out of the woods, or is this just a temporary reprieve? Drop your thoughts in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more corporate decoding. And don't forget to check out our Discord community linked in the description for even more discussions and insights. Thanks for watching, and we'll see you in the next one.